Well, the very simple answer would be for savers and therefore long-term investors, just the return has vanished. However, the much more important perspective is that the return risk structure has changed dramatically. We actually see much less return, and the risk to a large degree has stayed where it always was. And therefore, for a long-term investor who is oriented into fundamental value, these type of concepts, it has become a world that is very, very difficult. It's in many areas a market where we cannot find assets at the right price anymore. Well, for the investors, I would say they really learn they need to understand what risks are rewarded. And they need to invest according to their understanding. For regulators, I believe they have seen that they must almost at any cost avoid to force procyclicality, or if it is more extreme, herding behavior. And for governments, well, governments most certainly have learned by now that time is running, and even if central banks buy time, they need to use it for all kinds of reforms. And by now, they need to use it quickly. Well, it may sound, let's say, very sad, but simply the economic environment in many, many markets, countries, let people understand that certain reforms need to happen. Greece is one of these examples where we have seen really kind of a conversion of the current government from one perspective, one orientation, to a completely different one today. So that's a driver. The learning, the understanding of the people improves, that something needs indeed to be changed. The other driver is, back to what I said before, investors will continue to look for fundamental value, and therefore certain opportunities will be used and others will simply no longer be followed.